Hello and good morning, everybody. You're with Martin Panev, Chief Account Executive Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. As usual, starting with a short coverage of the North American markets. The Dow Jones Industrial Average went almost 20 points up yesterday. The Nasdaq 80 points up. The Dixie Index is up to 96.45 from 96. ADF employment change came to 5,000 better than expected. The Chicago Purchasing Managers Index came worse than expected for 4.3 points yesterday. An estimate from payroll processor ADP put the number of jobs gained by the U.S. economy in September at 200,000, surpassing economists' forecast for 190,000 new jobs. This helped support the dollar throughout its gains, were soon capped by Chicago PMI report that showed area manufacturing activity slid into correction territory in the month of September. We also had Miss Yellen Speech. Basically, she did not comment on the U.S. economy or monetary policy. In brief, welcoming remarks to a community banking symposium. She spoke more about the smaller banks over there. We have the ISM manufacturing PMI and prices paid reports today. Market manufacturing PMI, construction spending month on month. Tomorrow, non-farm payrolls. Stay alert. Yesterday, GDP data came out in Canada, 0.1% better than expected. Also, today, the Royal Bank of Canada manufacturing PMI is due. European markets, the German DAX 30 opened with a small gap, ended pretty much with no price action, dodgy candle, close to the green though. The CAC 40, 60 points up yesterday. Today, European stocks were expected to be on an upbeat. We are having, yesterday we had CPI year-on-year 0.9 as expected, month-on-month as well, a little bit better than the expectation. The unemployment rate remains at 11%, even though we were expecting a slight decrease there. German unemployment rate, as expected, 6.5%. Italian CPI year-on-year, 0.3% as expected, and a little bit worse than previous on the monthly chart. Euro-dollar, 80 pips down yesterday versus the pound, 40 down versus the Australian dollar, 120 down versus the Canadian dollar, 220 down, versus the yen, 100 points down yesterday, versus the Kiwi, 190 down. We have Swiss retail sales reports. I think it should be coming any moment now. And also we have European, Germany, UK, Spanish, and Italian market manufacturing PMI reports due today. Tomorrow, we have the European Zone Producer Price Index report. Moving to the Asian Pacific region, starting with the Nikkei 225, 235 up yesterday, 230 already today. Foreign bond investments, half a trillion yen more than the previous. Foreign investment in Japan stocks showing capital inflow with a positive difference of more than 1.2 trillion yen. We also had Tankan reports yesterday. Large industry capex for the third quarter, 2.2% better than the expectations, now at 10.9%. Also, large industry reports 2.2% better than the expectations. The large manufacturing outlook for the third quarter, as the expectations, came out at 10 points, which is 6 points less than the previous though. Also, the large manufacturing index, 1 point worse than the expectations, now at 12 points. We have also the large non-manufacturers outlook for the third quarter, 1 point better than the expectations, now at 19 points. And the large non-manufacturing index, which came out 5 points better than the expectations. Currently, the level is 25 points. Today, we have jobs applicants ratio for the month of August. We also have the overall household spending year-on-year for the month of August and unemployment rate in August. We also have an important report for the monetary base year-on-year for the month of September. Moving to China, National Day, the banks were closed yesterday. The NBS manufacturing PMI for September, 0.2 points better than the expectations, now at 49.8. It's also 0.1 point better than the previous reading. Also, non-manufacturing PMI, 53.4 as previous. We also have the Caixin manufacturing PMI for the month of September, came out as expected at 47.2, which was a slight improvement of the previous 47 points report. Also, we had the Caixin China Services PMI for the month of September, which came out 0.7% worse than the anticipation. China's official factory gauge stabilized around a 3-year low as government stimulus measures showed signs of steadying the weakness in the manufacturing. The reports signal that 5 central bank interest rate cuts since November and the government unleashing the new rounds of infrastructure spending are gaining traction, helping to cushion the world's second largest economy. Still, excess capacity and factory gate deflation are pressuring China's manufacturers, adding headwinds for the government's 2015 growth objective of about 7%. The Australian dollar, seen as a proxy for China due to its raw material exports, strengthened after the report, while the offshore yuan was little changed. Stock markets from Australia and Japan extended gains, while equity exchanges in China and Hong Kong were closed due to the National Day holiday. And while we're close to the Pacific region, yesterday we had the AIG Performance Manufacturing Index in Australia, which came out as expected at 52.1 points. Australian policymakers face renewed pressure to cut interest rates already at a record low as falling commodity prices darken the outlook for the economy, heavily geared to selling resources to China, while central banker Mr. Glenn Stevens and his board will leave the benchmark at 2% on Tuesday, according to traders and economists, of course. There is a greater chance of a cut in coming months. Australia is cautious to undertake any cuts, as that might worsen the household bubble, though. Tomorrow we have a report for the retail sales scheduled for the Australian dollar. Moving to the commodities sector, starting with the S&P 500 index, which had a range of almost 40 points yesterday, currently staying at 1930, 1935. EA Crude Oil Stocks change yesterday. The stockpiles rose by 4.0 million barrels for the week ending in September 25th, significantly above estimation for a 0.5 million draw. Crude oil prices edged up in early Asian trading on Thursday, as demand was estimated to have remained strong despite slowing economic growth in Asia, and as Russian and Western air campaigns in Syria worried the markets. The WTI had 80 cents range yesterday. Currently, price is 45.70 per barrel. Gold futures fell sharply ahead of a speech by Federal Reserve Chairlady Janet Yellen on Wednesday afternoon, as optimistic U.S. employment data bolstered hawkish arguments for an interest rate hike by the U.S. Central Bank. Gold fell to 2-week low, reaching 1,111 per ounce. It also had a range of $16, currently trading at 11.14. That was pretty much all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye from me.